Very good morning, ladies and gentlemen. I'm Angshuman, Bhattacharya, a partner with Alvarez and Marsal. I've, throughout my career, worked in the area of food and agribusiness and also consumer businesses. A&M here is, Alvarez and Marsal is a knowledge partner for this event. Over the last 4 weeks, we've been working along with VC Circle to really get an esteemed set of panelists for making this session much more meaningful from a perspective of the topics that are covered, as well as a good networking platform. So I hope you find the discussion relevant and meaningful, and also find time to rub shoulders with some new age businesses, some established businesses, and some financial sponsors. Now, covering the food and agri sector, which is a pretty huge sector, and we saw it's about 17% of our GDP, that's only agri as such. But in 15 minutes, doing that job is like, going to the moon twice and back. But what I'll do is really try and, cover some of our compiled perspectives in the sector, both from what we see in the deal situations, both strategic as well as private equity. Cliched though it may seem a bit at this stage, because a lot's been talked about the larger Indian strong consumption economy, I think it's the right point to start in terms of covering the food and agribusiness sector, because there's no other sector or segment that is such a strong beneficiary of what we call the large Indian consumption story. Just a quick check on the facts. Strong growth in per capita disposable income, increase in about 11% CAGR between 2000 and 2015. We're looking at a 7 to 8% GDP growth, making India one of the fastest growing economies, if not the fastest. The most interesting part, 70% of our population below 35 years of age, higher incomes, higher consumption, has discretionary spending. Urbanization increasing at about 0.5% a year, leading to various trends. 168 million working women, 15 million of them in the organized workforce, completely changing the role of the family as such. Literacy rates up, and connectivity is at its best, as we've seen in the last 5 or 6 years. What does this really mean? What we're seeing in the food business especially is trends around convenience, value addition, product safety and hygiene consciousness, lifestyle-related products, on-the-go consumption, spending on leisure, local delivery of global experiences. So quite a few trends are really playing out in the food sector, food and beverage sector specifically, and that's really behind the larger positive sentiment of food and beverage companies in India. And if you look at the segmental growth rates, while Gaurav did mention that deal activity has been slightly slow, but the companies and sectors have delivered on the promise of growth. If you look across the packaged food segments that are presented on the slide, the kind of growth that these segments have demonstrated is pretty strong. Most of them are over double-digit growth. And what are some of the key growth drivers? We'll cover some of them going ahead. But if you look at demand side aspects, increased per capita consumption of products, there's a huge conversion happening from unorganized versions of food or unpackaged versions of food towards packaged versions of food, increasing population, especially in the relevant consuming segment. And from a supply side, I think there's a lot that the companies are also doing. There's improved product and brand proliferation, leading to a lot more customer choice and market development. Today, when you're having a category like snacks, you probably have 15 or 20 brands to choose from, which used to be only about 2 or 3, maybe just about 7 or 8 years back. Long shelf life products, introduction of convenience packaging, developing of the chilled distribution chain. For long, we've sort of complained about India's complex supply chain structure, especially on the outbound side, distribution. But a lot of changes are happening, a lot of investments are happening in terms of cold logistics to be able to place a lot many products in good, safe conditions in the retail outlets. And finally, something that's talked about a lot but really not happened as much as one would like to, which is really the entire rural market access. Companies are working towards it. There has been some level of penetration that's happened, but there's a huge opportunity out there waiting to be tapped. Some recent trends, a lot of analysts would look at the performance of certain large consumer companies in the recent past and say, hey, growth is seeming to be slowing down. Was that just a low base effect, or is there growth momentum that will carry us on to the next 5 or 7 years? But if you look at what happened between FY10 and 15, there was this period between FY12 and 14 where growth, overall economic growth was slow. But what really coupled the problems was that it was also a period of very high inflation. And when growth is low and the larger consumer sentiment slows down, and when along with that inflation starts increasing, there is obviously a pinch on the consumer wallet, and that leads to lower discretionary expenditure. And we saw that. If you look at the savings rate, which generally is 33, 34% plus, fell down to about 30% in this period. And the chart on the right indicates a lot of discretionary products and food. And really, we saw a decline in growth rates of products such as impulse categories, packaged snacks, ice creams, biscuits, etc. However, looking forward, there's a resurgent consumer confidence, and it's already starting to get reflected. FY16, Q1, Q2 have been good. Nielsen Global Consumer Confidence Index indicates that amongst developing countries, and of course amongst developed countries, India is at the highest when it comes to consumer confidence. And it's only expected to go stronger going forward, because we're looking at a period of sustained, strong economic growth, and inflation is under control. One more very important aspect of inflation that we typically miss is that companies also feel the pinch of inflation when there are margin pressures, and that's where their investment appetite, whether it's in marketing, whether it's product innovation or building out distribution, they sort of limit themselves. So this period of FY13 to 15 actually saw a little bit of a contraction of expansionary activity by companies, which also led from a supply side a subdued growth situation. Now, quickly covering some of the top investor themes and challenges that we see in the market. Going forward, I think the 6 themes that we've put together are, the first is penetration-led growth. If you follow Nielsen's information on numeric and weighted reach of retail outlets for various categories, you'd see there's a stark difference between FMCG products like soaps, detergents, which have almost penetrated to 70-80% of the outlets. But you look at packaged foods, even a category like snacks is only 35% penetrated in terms of retail. There are other categories like ice creams, etc., which are probably 10 or 12% penetration in sheer numeric terms. So very clearly there is a distribution-led growth theme that we're seeing, and there are companies which are doing a fantastic job. We'll be speaking to some of them through the course of this day, but they're doing a fantastic job in terms of just seeding the market, placing the product in various nooks and corners, whether it's tier 2 markets, tier 3 markets, or even rural markets, and generating growth. The second theme that we see clearly is the viability of a cold chain. Even 5 years back, when people used to talk about cold chain, it was always felt to be a necessity. But do the economics really stack up? Who's going to take the hit of underutilization? But right now, what we're seeing is that a lot of companies, especially led by the dairy sector and the poultry sector, are finding a 1 to 2 year payback in terms of chiller and freezer installations. So today, one very interesting way of generating growth is by putting chillers in retail outlets, placing your products, and it's really opening up a whole new range of opportunities for products like ice creams, like dairy products, like other ambient products which could also extend shelf life by 3 or 4 days in a chiller format. The third trend that I want to speak about is of regional challengers. For long, a lot of large categories like biscuits, like snacks have been dominated by large companies. But what we're seeing is there are very interesting companies like Balaji Wafers, for example, who have delivered through a unique value delivery mechanism, which is a mix of providing greater value to the consumer and working hard on distribution, and a very disciplined distribution setup to challenge some of the larger multinationals and the dominant incumbents in the space. So going forward, we're increasingly seeing a lot of companies. Just to give you a stat, there are about 3,000 packaged food and beverage companies over $30 million, which are budding today, which are investing in brands, investing in distribution, and would come up for fundraisers. So we feel very bullish in terms of being able to work with these smaller companies, which would work towards building probably a $200, $300 million firm in the next 4 or 5 years. The next big trend is value addition, which is basic plus. I'm sure we all as consumers understand how we're having much more of variants of the base product, and how the products that we consume, whether it's organic foods, whether it's health and wellness beverages, whether it's probiotic curd, how we're all upgrading in terms of value addition. And what it does for companies is provides them a platform to raise prices, improve margin profiles of the companies as well. Packaging innovation in a lot of categories, and I've been working a lot in the area of milk, and we see that innovation has been very stifled. And underlying somewhere, there's been this feeling that India is a very value-conscious market. But things are changing gradually as the top of the pyramid gets more and more affluent, and there's much more acceptance for packaging innovation and differentiation through packaging innovation. And finally, the importance of modern retail. There would be some statistics that say that 6% of total retail is modern retail, and it's expected to go to 12 or 13% in the next 5 years. It's a slow creep upward. But what's really happening is modern retail as a platform for new age brands and products is phenomenally advantageous, simply because it provides the level of visibility, it helps you connect with the right kind of consumers, and there's a natural polarization of commodities that's moving towards the mom-and-pop format and the value-added products that are moving towards modern retail. So depending on the categories that you serve as a company or a company decides to place, I think modern retail as a channel is an extremely important channel to keep in mind. Some challenges because of which I think the deal flow has been decent, but deal closures have been sort of slow. One is the ability to build lasting brands. I think the food service sector is a classic example of this challenge in terms of the fickle nature of the Indian consumer and the constant affinity to switch between brands and not have any loyalty to a certain format or a certain brand. I think that's one of the key challenges for new age businesses to build. The second has been margin protection, especially in the context of strong food inflation, and also related to agri-commodity related nuances which are related to weather and various other global phenomena. The third aspect, which we'll cover in more detail in the second session after this, is whether marketing is a cost or an investment. A promoter which is building or who's building a business often is pretty conservative in terms of the approach to market. But how these businesses look at whether it's a marketing cost or it's an investment into the future will determine also how they're able to grow going forward. The fourth is, of course, executional capabilities. If you look at the food businesses, largely all of them have a very intense component of sales and distribution, and that's a skill set that these companies need to build out. And I think a lot of interesting companies have come up, but it finally boils down to the execution capabilities to be able to deliver the promise or the investment thesis. And the final point, which is possibly the most important, is the right investment in governance, processes, systems, and people. I think these are some of the aspects which have impacted returns, valuations, and overall investor interest in this space. So that's a quick cover on the food space, food and beverage, packaged food and beverage space. We quickly cover some of the aspects also on the agri space. I think there are 3 or 4 big trends, although one would say that these are not like 1 or 2 year kind of themes. It's a slightly longer term story. There have been a lot of comparisons between India, China, other developed markets in terms of productivity, both in terms of land productivity as well as labor productivity. There is no quick fix solution really for it, but what we are seeing is some definitive trends around labor stress, water stress, and overall land consolidation requirements, because as we go forward, instead of our land consolidating, our average land holding size is actually going down. What does this call for? It really calls for technological advancements, whether it's seed technologies, agrochemicals, or mechanization. There's a huge amount of, I think Gaurav mentioned 17% of our GDP is from agriculture, and about 55 or 56% of our people are employed in agriculture. And we've seen this as part of a larger trend in emerging markets, that the next generation of people or the farmers' kids are not coming back to the farms. So there's huge migration happening out of agriculture towards more industrialized jobs, jobs in the cities. And that's putting a lot of stress, especially in seasonal labor requirements around harvesting time. And there's a dire need today, and there's a lot of work that companies are doing, but there's a dire need for automation of the right kinds to come in and replace the stress, because every day lost in the field is essentially yield loss for the farmer. And if there are solutions, especially in the area of harvesting, land preparation, which are more manual intensive, I think there's a clear winner out there. Labor costs have also been increasing. Our labor cost arbitrage over China in certain sectors like textiles, India is actually shaping up better. But in agriculture, given already the suppressed sort of realization for the farmer in the larger value chain, labor costs is obviously a very big consideration. The last trend is around the water stress. I think this is highly underestimated. Overall, our groundwater status is really in poor shape. But what's more important to note is, while we've had a good monsoon this year, and we always measure it by the number of cubic mm of rainfall, but it's also the variability in rainfall because of various other factors that's really disturbing agricultural trends. If the rain doesn't come on time, then you've got real serious issues in terms of yield, which translates into pricing pressures going forward. It's just a map of some of the red zones in terms of groundwater, and how a state like Punjab, which at one point in time used to be considered the agricultural hub, is really suffering from groundwater development issues. And finally, landholding sizes. Won't spend too much time on this because there is no established trend between landholding size and productivity, but it is an area of concern because it kind of constrains our ability to improve productivity and yield. Now, matching all of these together, we're talking about increased per capita consumption, population, upgradation of the consumer, and on the other hand, we're talking about certain stresses from a productivity perspective on the agri side. And obviously there's an imbalance that's building out, and there is a need for interventions, whether it's through technology or unique models. So what we see in agribusiness as themes and challenges, the first theme that we see very clearly, and it's playing out very well, whether it's seeds, whether it's specific agrochemicals which take care of weeds or weedicides, agri-inputs for productivity is clearly a theme which sees adoption and growth across companies. The second theme that we see is something that's inevitable, may not be a very short-term sort of trend, but farm mechanization has started picking up. Largely, it's the multinationals and the large companies which are playing in this space still, but there's a big opportunity for Indian companies also to come up with innovative and customized low-cost solutions for our farmers. The third is in terms of farm consolidation models in using technology as well as self-grown mechanisms. One of the things that we're seeing happen, not just in India, but in other parts of developing markets, is also large farmers sort of taking on cultivation for small farmers and really sort of consolidating land parcels to be able to instill better practices, more investment into the farm in the form of investment capital. The fourth very interesting one, which all of you may be familiar with, is post-harvest integrated solutions. In other words, collateral management, agri-warehousing, warehouse receipt financing, and financial services along with it. I think there's a very nice link that's building up between the farmer and the trading community as well as the processor in the form of post-harvest solutions. And one of our sponsors, Star Agri here, and there are many other companies, are really working in terms of being able to integrate the supply chain between the farm gate and the processor. And that really means providing a host of services which have huge possibilities of adoption. And the fifth trend is really technology creating linkages, information availability, whether it's weather, soil-related, market prices-related, connecting buyers and sellers together. I think technology is going to play a major role in terms of providing the platform for a better connect through the agri-supply chain. Some of the challenges in the agribusiness sector, which has kept investors away, according to us, is this whole unreliability of the prospects of the sector because of extreme high level of weather dependence. The regulatory uncertainties, the new seed price control order has changed the dynamics in terms of the seed industry and sort of subdued the interest that one was seeing in the seed industry earlier on. Lack of scalable investment targets. I think that's the other point. A lot of companies have grown out of rural agri-related ecosystems, and there is a need to sort of professionalize, which would mean not only in terms of systems and processes, but also in terms of things like intellectual property protection and giving the investors a more comfortable environment to be able to invest in these businesses. The fourth point is execution intensiveness. Rural businesses are typically extremely execution intense just because of the nature of fragmentation that's there on the supply side. I think there's no shortcut answer to it, but companies are and should work towards building out the right mechanisms which can create some level of operating leverage, and it's not a very intense execution-related sort of business model. And the final point stands equally importantly for agribusinesses, which is governance, processes, and systems. The overall level of maturity of some of these smaller agribusinesses need to come up in terms of the threshold of acceptability for financial investors to really find returns and interest. So these are some of the points that are impacting returns, valuations, and overall investor interest. Some of them have quick fix answers, and some of them are longer-term solutions. But these are some of our observations which we thought could be useful to set the context. Thank you very much. I hope you found this useful.